Hey everyone, and welcome back to The Deep Dive. We're diving deep today into the world of stablecoins and open banking. We've got this awesome document called Why Open and Core Banking is the Key for Banks to Drive CBDC and Stablecoin Adoption. And oh man, it is full of juicy insights.
Yeah, it really dives into how banks can be like leading the charge in this new financial landscape, not just, sitting on the sidelines.
Exactly. So we're going to break it all down for you guys, like what it all means for the future of finance and, yeah, even for like your own wallets down the road.
Yeah.
But first things first, let's just make sure we're all on the same page here. What exactly are stablecoins, and why is everyone making such a big deal about them?
Okay, so imagine like digital cash that's, as easy to use as cryptocurrency, but without all the crazy price swings. That's kind of the beauty of a stablecoin. It's pegged to something stable like the US dollar.
So it's like digital dollars, but they can zoom around the internet super fast.
Mm-hmm.
Okay, I'm starting to see the appeal here, but where do banks fit into all of this? It seems like stablecoins could totally disrupt traditional banking.
Well, that's the really interesting part. Instead of being disrupted, banks could actually become the main issuers of stablecoins, backed by their reserves and everything.
Whoa, hold on. Banks issuing their own stablecoins. That's a plot twist I wasn't expecting. What would be the advantage of that?
It would let banks tap into this whole new world of digital finance, attract customers who are into crypto, and offer new types of accounts and payment services. They could really shape the future of money.
Okay, this is where things get really interesting. The document talks about how banks could back these stablecoins. And it's not just a simple one-to-one peg with the dollar. They're talking about something called dynamic collateralization.
Right. It's like a diversified portfolio for a stablecoin. So instead of just holding dollars, banks could back their stablecoins with a mix of assets, like short-term government bonds, high-quality corporate debt, even things like tokenized real estate.
A basket of assets instead of just dollars. That sounds way more flexible. But also maybe a bit riskier.
Well, yeah, there are definitely benefits and risks. It could make stablecoins more resilient, able to handle market ups and downs better. But it would also require some seriously smart risk management and regulation. And there's another big piece to this whole puzzle: transparency.
Right. If I'm going to trust a stablecoin, I want to know it's actually backed by something real. How could banks prove that they're, playing by the rules?
The document suggests a two-pronged approach. On one side, you have on-chain transparency, using blockchain technology. So imagine all the info about those backing assets is publicly verifiable on the blockchain. They call it proof of reserves.
So anyone could check and see that there's no funny business going on, that the stablecoins are legit.
Exactly. And then on the other side, you have traditional off-chain audits by, reputable third-party firms. To add an extra layer of assurance, that combination could really build trust.
It sounds like central bank digital currencies, or CBDCs, are also entering the picture. I've heard a lot of buzz about those lately.
Oh, absolutely. As central banks worldwide are exploring their own digital currencies, banks could integrate those CBDCs into the reserves backing their stablecoins.
So instead of holding dollars, they could hold these CBDCs. What would be the benefit of that?
Well, for one thing, CBDCs are designed for the digital world, so they're a natural fit for the stablecoin ecosystem. Plus, using CBDCs for reserves could allow for instant settlement of transactions, making payments even smoother.
Okay, so we've got stablecoins potentially backed by this mix of assets, including CBDCs with a big emphasis on transparency. But how do we actually get these stablecoins to work with our existing financial systems? That's where I kind of get lost.
That's where open banking comes in. And it's a total game changer. It's all about secure data sharing between banks and other financial service providers through these things called APIs.
APIs.
Okay.
They're everywhere these days. But remind me, what exactly do they do?
Think of an API like a secure bridge that lets different systems talk to each other and exchange information. In the context of open banking, it means your regular bank account could connect seamlessly with a platform that manages your stablecoins.
So no more jumping between different apps and manually transferring money back and forth. That would be amazing.
Exactly. You could link your bank account to a digital wallet holding your stablecoins and switch between regular currency and stablecoins super easily.
That sounds so much more convenient. Are there any other ways open banking could make things easier for users?
Absolutely. Imagine getting real-time notifications every time you make a purchase with stablecoins. Or picture a single platform that combines your traditional banking with your stablecoin wallet all in one place. It would be like having the best of both worlds.
This all sounds like a recipe for a much smoother and user-friendly financial experience. But I imagine not everyone is thrilled about this shift toward stablecoins and open banking. What about the traditional players in the financial system? Are they on board?
Well, there will likely be some pushback. The document specifically mentions correspondent banks as a group that might be hesitant about all these changes.
Correspondent banks. Remind me, who are they again?
They're basically the middlemen that make cross-border payments and currency exchanges happen between banks in different countries. They're a crucial part of how the financial system works today.
Okay, so why might they be resistant to stablecoins and open banking?
Well, think about it. Their current business model relies heavily on fees for cross-border transactions, currency conversions, and settlements. Stablecoins could potentially cut them out of the loop and drastically reduce those fees.
So it's a threat to their bottom line.
Yeah.
I get it. Are there any other concerns they might have?
Another big one is disintermediation, basically being cut out of the process entirely. Stablecoins and open banking could allow people and businesses to send money directly to each other, bypassing the need for correspondent banks as middlemen.
It's kind of like how ride-sharing apps disrupted the taxi industry. But couldn't correspondent banks adapt and find new ways to be valuable in this new landscape?
Oh, absolutely. They have a ton of expertise in international finance and regulatory compliance. They could become key players in the stablecoin ecosystem, maybe offering specialized custody services for stablecoin reserves, or developing new tools for managing cross-border stablecoin transactions. It all comes down to being proactive and innovative.
So even for those who might initially see stablecoins and open banking as a threat, there's a huge opportunity to evolve and thrive in this new world.
Exactly. It's not about resisting change, it's about finding ways to shape the future of finance.
This document really highlights how these new technologies could completely transform how we think about money and payments. I'm starting to see the bigger picture here, and it's pretty exciting. But before we get too ahead of ourselves, let's bring it back to some practical examples. How could open banking actually make life easier for users? Let's paint a picture.
Great idea. Let's dive into some real-world scenarios. Imagine you're on vacation overseas and you need to exchange some currency. Instead of hunting down a currency exchange kiosk and paying those crazy fees, you just pull out your phone, open an app that's connected to your stablecoin wallet, and boom.
I can instantly convert my dollars into a stablecoin pegged to the local currency. Right there on my phone. That's awesome.
Exactly. And then you can use those stablecoins to pay for things directly. No more fumbling with unfamiliar bills or worrying about getting ripped off on the exchange rate.
That would be a game changer for international travel for sure. What about everyday purchases, though? Could I use stablecoins to buy groceries or grab my morning coffee?
Totally. Picture this. You're at your favorite coffee shop, and instead of swiping your credit card, you scan a QR code and pay instantly with stablecoins right from your digital wallet. The transaction goes through in seconds, with lower fees than you'd get with credit card companies.
Okay, that's pretty slick. No more digging for cash or waiting for those credit card authorizations. But what about security? Are stablecoin transactions actually safe?
That's a great question, and security is super important. Because stablecoin transactions are recorded on a blockchain, they offer a high level of security and transparency. Every transaction is cryptographically secured and can be tracked on the blockchain, making it really difficult for fraudsters to mess with the system.
So it's like having a super secure digital ledger that everyone can see. That does sound reassuring. It seems like open banking and stablecoins could really simplify our day-to-day financial lives, from paying for coffee to traveling the globe. But zooming out a bit, what kind of impact could these innovations have on the overall financial system?
Well, one of the most significant impacts could be increasing financial inclusion. Millions of people around the world are unbanked, meaning they don't have access to traditional banking services. But with stablecoins and open banking, they could participate in the global economy using just a mobile phone.
That's a powerful point. It could empower people in developing countries and underserved communities to access financial tools that were previously out of reach.
Exactly. And it's not just about payments. Stablecoins and open banking could also spark innovation in other areas of finance. We could see new lending and borrowing platforms pop up powered by stablecoins, and using the data sharing capabilities of open banking to offer more personalized and accessible financial products.
It's not just about changing how we pay for things. It's about building a whole new financial ecosystem, one that's more efficient, transparent, and accessible to everyone. But let's be realistic for a second. Every new technology comes with its own set of challenges. We talked about the potential resistance from correspondent banks, but what other hurdles could hinder the adoption of stablecoins and open banking?
One of the biggest challenges is regulatory uncertainty. The rules surrounding stablecoins and open banking are still being developed, And different countries are taking different approaches. This lack of clarity can make it tough for banks and other financial institutions to fully commit to these technologies.
So it's kind of like a waiting game to see how regulators will respond and what kind of guidelines they'll put in place. What else should we be keeping an eye on?
Another potential challenge is the risk of fragmentation. If different countries and companies develop their own stablecoin systems that can't talk to each other, it could create a fractured financial landscape that's difficult to navigate.
That would kind of defeat the purpose of creating a more streamlined and interconnected global financial system, right?
Exactly. To avoid that, it's super important for everyone involved to work together and establish interoperable standards. We need different stablecoin systems to be able to talk to each other seamlessly.
Collaboration is key then, not just to overcome technical hurdles, but to make sure these innovations benefit everyone, not just a select few. You mentioned security earlier, but are there any other cybersecurity concerns we should be thinking about with stablecoin systems?
Cybersecurity is always a major concern with any digital financial system. It's critical that stablecoin platforms and open banking APIs are built with strong security measures to protect against hacking, fraud, and data breaches. We're talking about people's money and sensitive financial data, so security has to be a top priority.
So it's not just about developing the technology, it's about developing it responsibly and making sure user data is protected.
Absolutely. Building trust in these new systems is essential for mass adoption. People need to feel confident that their money and data are safe.
It sounds like we're on the verge of a major transformation in finance. There are definitely challenges and risks, but potential rewards. A more inclusive, efficient, and user-friendly financial system are pretty incredible. This document lays out a roadmap for banks and other financial institutions to navigate this new world, urging them to embrace innovation and collaboration.
Yeah, it's a fascinating time to be following all of this. We're seeing the future of finance unfold right before our eyes.
So let's turn our attention back to the listener for a moment. What are the key takeaways from all this talk about stablecoins, open banking, and the future of finance?
I think the biggest takeaway is that stablecoins have the potential to completely revolutionize how we think about money and payments, making transactions faster, cheaper, and accessible to people all over the world.
And open banking is a critical piece of the puzzle, making it possible to seamlessly connect stablecoins with our existing financial systems.
Right. Open banking lays the groundwork for a more interconnected and user-friendly financial experience, where you can manage both your traditional and digital finances from a single platform.
But it's important to remember that this shift won't happen overnight. There are challenges to overcome, like those regulatory uncertainties, cybersecurity risks, and pushback from traditional players who might feel threatened.
Definitely. It's going to require everyone to be open to new ideas, willing to adapt, and committed to collaborating to make this vision a reality.
This document does a great job of highlighting both the opportunities and challenges, offering practical advice for banks and other financial institutions as they navigate this exciting new landscape. It's a must-read for anyone who wants to understand the forces shaping the future of finance.
Couldn't agree more.
And with that, we've reached the end of our deep dive. But before we sign off, let's leave our listeners with something to think about. As stablecoins and open banking continue to evolve, I can't help but wonder, what's the long game here? How will all of this impact the financial landscape in like 5 or 10 years? What are your predictions?
Well, it's tough to say for sure, but if I had to put on my futurist hat, I think we could be looking at a world where stablecoins are the primary way we make digital payments. Seamless, instant transactions both domestically and internationally. Imagine paying your rent in stablecoins, or sending money to a friend across the globe with just a couple taps on your phone.
No more waiting for those bank transfers to clear, that's for sure. And with open banking weaving everything together, all our finances can be accessible in one place, whether it's traditional bank accounts, investments, or those stablecoin wallets.
Exactly. And think about the potential for innovation in financial services. We could see a whole new generation of personalized apps and platforms emerge, offering things like microinvesting, AI-powered budgeting tools, or even peer-to-peer lending powered by stablecoins.
So more dynamic, personalized, and accessible financial experience for everyone. But we've talked about the challenges too. If this future is going to be a positive one, what are the key things we need to get right?
Well, the regulatory landscape is crucial. Clear guidelines and frameworks are essential for fostering innovation and ensuring consumer protection. Otherwise, we risk either stifling growth or, even worse, creating opportunities for bad actors.
Yeah, we don't want to repeat the mistakes of the past.
Yeah.
And what about cybersecurity? As these systems become more interconnected, the stakes get higher.
For sure. Robust cybersecurity measures need to be built into every layer of these systems. We need to protect against hacks, data breaches, and fraud. Because ultimately, it's about building and maintaining trust. If people don't feel confident that their money and data are safe, the whole thing falls apart.
So it's a balancing act then. Foster innovation while also ensuring stability and security. Sounds like a pretty big responsibility for banks and regulators.
It is, but it's also an incredible opportunity to create a financial system that's truly fit for the digital age, one that's more efficient, more inclusive, and ultimately serves everyone better.
This document is a call to action then, not just for banks and tech companies, but for all of us to engage in this conversation, to understand the potential benefits and risks, and to help shape a future where finance works for everyone.
Absolutely. It's a future worth fighting for.
So to wrap things up, we want to leave you with this. As we go about our lives, let's pay attention to how we interact with money. The next time you swipe your credit card or send a payment online, think about how stablecoins and open banking could change that experience. What excites you? What concerns you? And what role do you want to play in shaping this future? Because it's not just happening to us, it's happening with us. Thanks for joining us on this deep dive. We'll see you next time for another fascinating exploration of the world of finance.
Until then, keep learning and keep asking questions.